Hello and welcome to my weekly review of the stock market. This week was a very interesting week because one, of course, it ended in the green. The Nifty was up 1.25%. But what was interesting was the fact that the broader market, the small caps, the mid caps, the micro caps, all did much better. In fact, small caps were up almost 4.5%. Micro caps were up almost 5%. So clearly a broader market recovery. What triggered this? Well, the good news around the war in terms of the talks and the ceasefire and all of that was there on Thursday and Friday. That led to a rally. But what's interesting is that FIs also have turned from being net negative sellers to small net positive sellers. So that's very good news. So probably indicating that they feel that a lot of the correction is done and there's good news ahead as of Friday. But the DIS surprisingly turned negative during the course of the week and ended the week with strong profit booking. So, are they looking at the negative way in the market and its developments? I don't think so. I think it's more likely to do with the fact that they are booking profits in sectors that have made very good returns and are keeping cash for the earnings season so that they can buy the right companies and the stocks during the earnings season. And this is evidence from the fact that PSU banks, auto, these are not so great performing sectors. And where the sectors were performing well were all the high risk cyclical sectors like real estate and defense, and those kind of things have done very well. So, what accounts to the fact that the broader market rallied so much despite DIS selling? Because FIs, as you know, play in the top 100, stocks. So the answer then lies clearly that it's retail and HNI money which has driven up the broader part of the market. And the advanced decline ratios also, if you see from the beginning of the week, later towards the end of the week, it was almost 2:1, almost 2,000 stocks going up to 1,000 stocks going down. So very good broad retail participation has driven the rally in this week. So when you now look at it from the next week perspective, two, three things have already happened. So first is that the good news of Friday has dissipated a bit because of the fact that Iran has fired on a couple of vessels. Mr. Trump is unhappy with it. That's one not so great news. But Israel and Lebanon have started talks and some kind of a ceasefire is there. That's reasonably good news. Then there's a team, American team, which is going down to Pakistan for a second level of talks. That's good news. So a lot of geopolitical developments over the weekend. So Monday, on Friday when we closed, we thought Monday will be a gap up open. The gift nifty, everything was indicating. But all of these developments, because the markets have been closed, we have to wait and see for Monday morning now on what happens to the oil, how it reacts to these developments. Then we'll know how the gift nifty is reacted, and accordingly the market will come. Now, one thing which is there, which I noticed that even in the F&O side, the FIs are still carrying a large number of shorts. So any bump up rally because of the sustenance of this good news could lead to a further short covering from them and could take the market to higher levels. So, but the geopolitical hangover remains in terms of all these things. So the week will be dominated by the geopolitics. That's number one. Number two aspect which will help here is the fact that HDFC Bank and ICICI Bank and one more bank have declared their results. And by and large, the results are positive, showing very strong credit growth, a good asset quality, and hence that should give a good impetus to the Bank Nifty on Monday, which again is a key part of the F&O segment. So a lot of mix of good news and not so great news influencing the market. And next week, remember, more than 100 companies are going to report their earnings. So DIS will be carefully studying this, and especially bellwethers. They will study to take calls. So DIS may start the week off by still selling, but by the end of the week, if they get clarity, they could start buying. But there will be sector rotation from the DIS. So, as an investor perspective, I think that nothing changes. You still continue to accumulate in a staggered manner and in a diversified manner. That remains the case for the week. One always hopes that there's a breakthrough in the war and everything can turn normal, because oil prices, which are currently hovering around the $92 levels, based on geopolitics, could sharply move either way, right? So, and that's what is sensitive for India from an economy and from a stock market perspective. So a week where you have to remain alert over all the news. Remember that along with the news, there's also a lot of fake news floating around, and Mr. Trump's tweet is reliable only until the next tweet. So do not react to these news. Stick to a systematic, steady accumulation of a diversified portfolio to repeat it once again. Thank you, and look forward to my next update on the war in the markets. Thank you, folks.